Welcome to Duckfund Talks, where smart capital meets action. On today's episode, we're joined by Bob Clippinger, founder and president of Clippinger Investment Properties. Bob has spent decades in the real estate world, leading a firm known for its disciplined approach to acquisitions, asset management, and investment partnership. Whether it's office, industrial, or multifamily, Bob has seen it all, and he brings both expertise and a healthy dose of practical wisdom to the table. So expect insights and maybe a few lessons you won't find in any textbook. Bob, it's great to have you on Duckfund Talks.
Thank you, Anna. Appreciate the time.
Instead of asking for a regular introduction, I want to start with some kind of poetic question. So if I'm writing a book about you, what's the title of the chapter you're in right now? And what's the one move that got you there?
Wow, I think what I would say about that is in the arena. There's a great quote by Theodore Roosevelt talking about being in the arena, and it's really about, it's not the man who does certain things a certain way. It's the guy who's in the arena trying to battle his way through the situations that come upon him and working hard to make sure they happen. And I think the one thing I would say to answer the other part of that question is just action, just getting out there every day and working hard and trying to find the right deals and sharpening the deals you already have. And then meeting with a lot of different clients and trying to find out what they need and how they look at things and try to find deals that will work for them and that will help them achieve their goals as well. I think that's staying in the game, just hitting it every day at 8 o'clock in the morning and then walking away from your desk at 6 or 7, whatever that takes.
I hear a lot of discipline here and also a lot of flexibility. I wonder in investing and commercial real estate investing, who you are, like Tesla for innovation, Amazon for systems, IKEA for simplicity, or probably Starbucks for rapid growth and huge love to coffee.
Wow. Okay. So that's an interesting way to put that. And I would say that we're probably more the Starbucks. We're not the big box guy. We're more the more nimble. We like heavy value. We like a lot of price per square foot, which Starbucks does pay. But they have key locations and they are very defined and they're very well marketed and they have something kind of for everybody in there, but not taking up a huge amount of space and trying to stay fairly nimble and aware of their client. Let's put it that way. Because I think that's one of the things Starbucks does, right? Like you get the latte for Christmas, the cup changes.
The flavor, yeah.
The flavors change, right? You get pumpkin spice and Halloween and then you get it going. So I think that's probably us a little bit. And we've been around for a long time. We've been around for over 40 years. My history goes back over 50 years if you talk about early actions and when I was in grade school. So
believe it or not, when I was at Stanford, we went to China as a trip abroad together with our professors, and we met Starbucks CEO.
Wow.
So what impressed me the most, she told us that Starbucks in China opens new doors of a new venue every 14 minutes during the day.
Every 14 minutes?
Every 14 minutes.
Amazing.
In China, they open new doors, and that's crazy. And I have no idea how she manages that all, and that's incredible.
Wow, what a team. But I also wonder this too, Anna, at the same time, how often do they close locations? And I don't see them closing locations much. I saw during COVID them closing locations because that's also interesting, right? Like where do they find the markets fall off and where do they open up new ones? But every 14 minutes, they're certainly opening up more than they're closing, that's for sure.
Yeah, yeah.
That's really interesting.
True.
Wow,
Yeah.
wow. Huh.
So they definitely found their sweet spot. And what do you think is your sweet spot in commercial real estate today? And what is the type of deal you're most likely to say yes to?
Sweet spot is opportunity. And I see opportunity all over the place. I mean, I'm underwriting so many deals that make sense that I can't do because I don't have the bandwidth for it. I think distressed, everyone wants a distressed deal, right? And so a lot of deals are going back to the bank. Some are not going back to the bank, but they're still distressed. You look at opportunity, I'm finding opportunities here in Los Angeles. We have opportunities in the Midwest and other markets where the people are not used to going, but there's always opportunity, I think. And we like mixed use projects. I love the mixed use project where I can take the retail and dial in the retail so that it services the units above it, be it some office or mostly residential. That is exciting to me, to create an environment where the ground floor retail services the upstairs, raises the rents upstairs. If you get some really good people on the ground floor that service upstairs, then people are going to pay more. Also, you look at a lot of markets that there's weather issues right now. There's a lot of weather going on in different places. It's so cold. People don't necessarily want to go out 4 blocks away to get their Starbucks or their dry cleaning or their dog washing and everything else. So if you have it in your building, that's going to drive more value, more community, things of that nature. So that's where we're seeing opportunity, multifamily, but mostly mixed use projects that are just don't have the right vision or right retail aspect to them.
Interesting. And you mentioned distressed assets, and as I see this market, cash is king on distressed market.
Right.
So equity is very much needed, and I wonder what's the biggest lesson you learned from LPs or core GPs, and when you're looking for additional equity capital, what's one thing you screen immediately, and what is a complete no-go for you?
Wow. Okay. That's a huge question. And then look at having done this for over 40 years, 45 years, I've learned some lessons. I think one of the things I look at first and foremost is whose capital is it? What's their focus? What are they looking for? Why are they investing? And then if it's a family, let's say it's a founder, it's a family who's made a lot of money, they're going to invest their money. Who's next in charge? What does the second generation look like? What are their goals and ambitions? What are they doing? Because sooner or later, because I've been doing this for a long time, I'm on the fourth generation of some families, you end up dealing with the second, third, and fourth generations. And what are their goals and ambitions? And because that's really, really, really important, because once you get there, they can throw the wrench into everything that you're doing. We've had some projects that we've owned for 30 years or more, and we've had some people in the second and third generation throw huge wrenches in because their goals and ambitions are not the same as the founder. They have a different set of goals. Their spouse, their significant other might have different goals. And so then that throws into the wrench, and they are the investor now. And so you have to make changes based on what they want to do. And sometimes those goals are not aligned with everybody else's goals. So looking at the hold terms, and that's why a lot of founders and a lot of guys in my space don't own property for more than 5 years, because these issues come into play. We've successfully done it with probably 10 or 12 different properties with probably 15 to 20 families. And we've held on to those, but we've done a lot of management in the meantime, right? So what I look at is, what are their goals? Can we meet those goals? What are their triggers? Does the property match the business plan? What can I do to affect the changes in the property to make sure the business plan, because we operate our own properties. We don't put together a business plan, then call CBRE or somebody else, okay, here it is, go execute. That doesn't work for me. We got to walk through the property and make the changes on the daily to make sure that we are hitting our goals. So that's a huge, don't just take anybody's money because they're offering it to you, because you might find out that that is really going to be tragic at the end of the day. So I think make sure that your goals are very much aligned, make sure that you understand the people, make sure you have a good feeling for the people, make sure you get along with the people, because some people you just don't get along with, and like that's not going to work, right? Because there's always going to be a problem, Anna, as we all know. And when that problem comes up, you got to be able to work through it with people and sit down with calm heads and go, okay, this has changed. And most founders you will find will be, yeah, there's always going to be a problem, Bob. What are we going to do about it? Second, third, and fourth generations or other people are like, there's a problem. First thing they do is call their attorney. I was speaking at a conference recently talking about this issue, and people were sitting there, and I said, how many guys have a 5-year-old fund? Hands raised. How many attorneys are working with a 5-year-old fund? And right next to every 5-year-old fund was their attorney. And I said, yeah, see, because rather than working through the issue, the first thing you do is call your attorney. Like, what triggers can we pull? Rather than understanding how can we work through the issue and get to a resolution rather than just going legal right off the bat. So I hope I answered that question, because it's a topic.
It's a broad one, and thank you very much for your answer. I absolutely agree, and I always call it a marriage. So if you get into a marriage, you need to make sure that your core values are aligned. You can polish the relationship going forward, but still you need to agree on most important things for you. And going back to your comment on succession, it's very interesting what's going on right now in the stock market as well, because you know the company LVMH, owned by a French guy, Bernard Arnault. The investors are now started asking him about his succession plan, and that kind of influences the stock market prices. So it's critical everywhere. It's very important to understand how the succession will look like in every business. Yeah. So I completely agree with you.
I'm sorry. That succession plan might have to be executed overnight. Like
Yeah.
we've seen this happen. And so, and are those core values passed down? And are you able to execute that smoothly? I'm working right now with a person who came to me that has a property that beautiful plan. The founder passed away and there was no succession plan. And so the spouse of the founder is now calling me saying, how do I fix this? I'm like, well, you can, but you gotta be flexible and move really fast because right away, if you stall out in the middle of a construction, interest, penalties, loans become due
Yeah,
before the
yeah, that's
construction. I mean,
very important. There are very
oof,
important consequences.
you
That's
gotta
true.
have you gotta have that team in place for just in case, right? So
Yeah. On a daily basis, where are you looking for co-GPs? You
I do
just
a
talk
lot
to
of
people that's just network, or there
I
is, I don't know.
network, I network.
So it's
Yeah.
it's your personal relationship, but I understand that co-GP can bring some equity and some expertise and some balance sheet and everything else.
The code GP is the place where like guys like me, right? Like I can use a code GP on a deal because I need the equity. I might need some of the portfolio or the balance sheet backup, right? What I need them for is balance sheet and the earnest money deposit. Because once I get past the due diligence, when I say, hey, my deal is now done, I'm ready to go, I've done my due diligence, then I can raise the money.
That's a huge insight, actually. Combining balance sheet to have an opportunity to raise more equity and, be in front of the LPs, a more substantial group with traction
Right.
and stuff. That's something that might be very useful. Going to my next question, what is the most counterintuitive thing you believe about deals in 2026? Where do you think the trend is going and what you see that probably other sponsors don't see?
Oof. Wow. That's so good. That's a great question. One of the things based in Los Angeles is that we do a lot of investing in LA and California, where a lot of people on the East Coast, we have a difficult time raising capital for them because they still think it's, the land of fruits and nuts. And I'm not saying that's not, but I am saying that there's a huge demand here for multifamily, for mixed use, buy and hold, have a long-term strategy. And then in other markets, we're involved in some smaller markets across the US where there's tremendous opportunity, but we have difficulty raising capital because people are like, well, I don't know that market. Okay, well, it's not a cow town. It's not like the Midwest and we're 40 miles outside of Kansas City. It's a major airport, international airport in the city, but yet nobody really is like, well, we don't know it very well. Okay, well, let's find out about it because these markets are changing. And a lot of the Midwest markets are more robust than they used to be. People moved there during COVID because the pricing, and still now the pricing. I mean, in Los Angeles, an entry-level home is $1.5 million, maybe $1.6 million, right? Whereas you can buy a beautiful home in Ohio, Kansas,
True.
other parts of the Midwest for $400,000, $300,000. Beautiful house. Now there's some snow, and the job market is robust and things are growing and changing. And the other thing that I would say is stop relying all on AI. If I have one more junior underwriter that I send a deal to says I plugged it into AI and it says no, and I'm like, let me talk to your boss. Then I talk to the boss, right? And he's like, well, yeah, he's just got out, he's using AI and we don't know how to use AI. I'm like, yeah, but you can't tell that this lease can be bought out, right? And we can replace it with this person from AI. You got to get out of your chair, go kick the dirt.
Yeah.
If I talk to one more underwriter who's never been on a property, I said, well, have you ever managed a property? No. Have you ever sat in the manager's seat for a day? No. Have you ever walked a property? No. Have you ever a maintenance man? No. And you're underwriting? Like, look, I started this when I was 12 years old, right? I'm 63 years old. I started painting apartments and cleaning when I was 12 years old. I had to paint them, clean them, take a shower in the shower, put on a white shirt, sign the paperwork with the people at 12, 13, 14 years old, ride my bike to the guy who owned the building's stock brokerage office, hand him the check. He would give me a candy bar and some money, and I ride my bike home. So I learned like how these things happen. The first person I see at my properties is the head of maintenance. I don't go see the manager first. The maintenance guy knows what's going on before the manager does, right? So
100%.
get out of your chair. Go volunteer to be an on-site manager for a week, a month, something, because then you're going to understand that when you call the manager and they can't talk to you because they're at a property and the lady's trying to pay their rent, but she's holding her baby and the baby might have had an accident and she's trying to figure all this out, but she doesn't have time to talk to you, you have respect for that because she's the person that's running your building. She's collecting the rent. So AI, I mean, if I plugged some of my deals into AI and it says it's not going to work, but yet I have a 30% IRR.
Hmm.
So, okay, let's use these tools appropriately, but not as the yes and no. And when I talk to the founders and the guys next level up from these assistants, they're like, you're right. We would love to get Joey out, but that's not what we do here. Well, all right.
Yeah. Well, I
That's
agree. We
interesting.
cannot rely on AI in decision making. That's very supportive in data collection and
Yeah.
provide us with the information to analyze, but we need to do the analysis ourselves. 100%
What,
agree with you.
and what's funny about that too, Anna, is like, when it creates opportunity for those of us who are willing to get out of our chairs. You know what I mean? Like I walk properties, I'll crawl the basement. For those are opportunities that people who actually get out of their chair are going to take advantage of. So you know what? If it dummies down the market and people are not going to pay attention, knock yourselves out, Xanadu, because it gives me more opportunity to go out and find deals and other people like me who are willing to do the work.
Yeah, yeah, that's true.
Yeah. Yeah.
Well, going back to your thesis about California, I think it's hard to raise capital because of the legal system in California. The laws are so strict
I
for
would
investments,
say
for lending, for everything else. It's so hard.
it's hard, but there's a huge demand here. Now, let me separate two things. I was in Sacramento, invested for 20 years. I will no longer invest in that market. That legal system is broken. It's broken, broken, broken. I We're selling our last property in there in that market
Hmm.
now, and we will never buy again. And it's taken me a year to get somebody out on a legal eviction. But I'll buy San Francisco. We'll buy Northern California. Orange County market, great. We've had a portfolio there for 35 years of apartments. Runs great. Never a problem. LA is a little bit more strict, a little bit more difficult now that we have some rent controls, but a huge demand. I mean, we're buying
Hmm.
a building 4 blocks away from where I live in Hancock Park and no vacancies in the market, right? I mean, to the point where now people are developing projects ground up that are one floor, has probably 10 bedrooms, 2 kitchens, a major kitchen and a kitchenette, and people are renting rooms for $1,500 a month,
Oh, wow.
right?
I've never heard
So
of that.
and I'm buying a building. I found a building with some vacancies that we can buy because it's an owner that's tired of running the property, just let things be vacant and moved out of town. So, LA, I always say, is a different market. Like New York has fewer buildings, but they're 40 stories tall. We
Yeah.
have many buildings, they're 4 stories tall, but they're 40 blocks. And so there's every
Yeah.
building has a different owner. So it's the land of small mom and pop investors for the most part. When I have a mandate from a partner saying, I want to buy California and LA, we want 100 units or more, I'm like, good luck. That's just not, I can buy you 250 unit buildings. I can buy you 425 unit buildings, but there's not that many of those buildings and they get so marked up, they still sell for 5 caps. Or else I can buy a smaller building for a 6.5 cap and, develop it into a better marketable deal. So yes, I understand. But I think also it's like anything else. Like if you watch the news right now, the whole East Coast is frozen. Like
Yeah.
people are sliding around. Like
Frozen,
cars are
frozen.
flying off the roads.
Yeah.
People are dying in their houses of freeze. That's
Yeah.
not the truth. I was just back east. It's cold. You can walk around the street. It's fine. There's nothing going on. But when you hear about California, everything's on fire, or we have earthquakes, or when the fires were raging in LA, I live in the middle of LA. That was Malibu, and that was kind of above the hills of Pasadena. Everybody was kind of running around doing their thing. No one was, I mean, we're obviously concerned, but obviously we're not thinking that we're going to catch on fire. So I think that those markets are really, really good markets. There's some great California markets, great opportunity here. We've made huge returns in California over the years. Now it's more of a buy and hold strategy for the most part,
Hmm.
but the building I'm buying 4 blocks away, I can sell in a year from now and probably double my money and then some. So
Well, I remember my days in California. I lived in Palo Alto when I was at Stanford, and
yeah.
that was a very nice place to be. And part of my heart is still there, so I really
Well, I
love the
mean, look at you
place.
can see. I mean, outside today it's 80 degrees.
Yeah, yeah, I can see that.
I won't show
Oh,
the full
cool.
thing, but yeah, it's 80 degrees out.
Okay.
It's nice.
Yeah,
And
it's always nice
LA,
and sunny. It's perfect.
yeah, and LA is a great place. I mean, you can go to the beach, you can go to the desert, and you can go to the mountains skiing all in the same day. You can swim, you can golf, and you can ski all in the same day. So we put up with some stuff once in a while for that, but I've been all over the world, and I love living in California. It's a great spot.
I hear you. Yeah. I have a couple of questions left, and they're more like soft questions. The first one, what's your favorite motivational movie?
The Pursuit of Happiness, Will Smith.
Yeah, I
Um,
know that. That's a good one. Yeah.
right? Because not only did he achieve, he had some real headwinds that he had to face. I mean, and then he grabbed his kid every day and went to the homeless shelter and figured that out. And then every day, and he didn't just become a worker someplace for an hourly wage. He took on a pretty intense sales job and did it. And with a lot of things stacked against him. And I think that it's easier in this life to succeed when you don't have things stacked against you. But when you do, you really learn grit. And I think that's one of my favorite motivational movie.
Yeah, at the very beginning, it's a very sad one, and there was a lot of empathy to him, and you really support him during the whole
Right.
movie. So, yeah, I
Yeah.
love this movie too. Last question, what is your biggest dream?
My biggest dream. Wow. Wow. I'm gonna cry a little bit about this one, but I want my children to succeed and be happy. They've gone through some stuff. I think that's a big dream for any parent, right? I like peace. I like serenity. Serenity to me is radically important. I've learned over the years to chase serenity, not necessarily monetary success. I want success in my business, certainly, and we have goals for that. But I think that serenity is underrated. Kindness is underrated as well. And I think looking for those things in people and places is radically important because I think along with that comes work success. I mean, I think we can all have short-term success by burning ourselves out, but having a long career, I've only ever worked for myself. I stopped working for a bank when I was 23 years old and started my own career, and I've been doing this for 40 years. And so that's probably my biggest dream is just for serenity and for some calm and peace and that kind of stuff. But success is part of that because I enjoy my job. There's an interesting thought process for people who are successful long term. We don't really define the difference between my personal life and my work life. It's just because I love my job. I have a blast at work. I will work 7 days a week if I don't put some controls on it because I just have fun. It's fascinating what I do and it's fun. And I think adding value is key for me. The profitability of it is important as well, but I don't look at deals like how much is Bob going to make. I look at how much value can I add, and I always make money. If you're adding value, you're always going to make money. You don't have to worry about that. So that's probably my biggest dream. Of course, children, success and happiness, and they have a flourishing life, and that they feel empowered and loved. And then that comes back to make me feel like I'm peaceful and serene. So
Thank you, Bob. Thank you for joining us today, sharing your insights, and also reminding us that while strategy and execution matter, it's your personality, your vision, and your authenticity that truly drive success.
thanks for the time. It's always great to chat with you.
And thanks everybody for listening, and we'll see you next time on Duckfund Talks. In the meantime, good deals and good luck.